Somebody bringing out Citi's co-head of U.S. software equity research, Tyler Radke. And Tyler, looking a little better. I know you've been. I know your phone's probably been ringing off the hook for a long time. You've got that look, like, oh man. So, here's the thing. How much of it, though, in your mind, has just been hysteria? We had a lot of stories out, software, the SaaS stuff. I mean, how much of it in your mind is just maybe just hysteria? Too much is overblown.
Well, look, I think what's really been driving this is the negativity has been just concerns of AI disintermediating this sector, right?
That's a kind word for saying destroying it, making it irrelevant.
Yeah, they don't let us put destroy in our research note titles. But the reality is OpenAI, Anthropic, right? These are trillions of dollars of new money getting poured into this AI sector. It was just reported this week, Anthropic's gone from $1 billion to $19 billion in revenue in a year. And they're projecting to add tens, if not hundreds of billions of dollars to those businesses. So investors are kind of saying, like, look, the software sector adds about $50 to $60 billion a year of new revenue. Now all of a sudden these AI companies are trying to do that. Like, where's all this money going to come from? Now I think the reality is, like, what is AI doing? It is doing a lot of automation of labor and processes. So maybe it's not just coming from the tech budget.
Did you see, by the way, some of that in today's jobs report, maybe that big disappointment? Can we start to really say, okay, there's no doubt AI is starting to take jobs, and if that's the case, will they start to eliminate certain sectors? Will there be niches, at least in your group in software, that you think don't survive?
Yeah, I mean, it is a concern out there, and clearly, I think it was last week we saw Block lay off, 40% of their workers. Now the question is that because of AI? Is it because of mismanagement? It's probably a little bit of both. I do think there is going to be pressure, though. As you look at the companies that are adopting AI the fastest, those companies are not hiring as fast, right? But again, AI also is creating opportunity for folks to start new businesses. We're
going to bring up the IGV chart here because, again, just it fell off a cliff. Software chart. Now I don't know if you use technicals in your work. You're a fundamentalist, right? But nice reverse head and shoulders. We're breaking out. Looks pretty good right now. But there are certain people. This looks great for a trader. For investors, could this be your cue that okay, the worst is over?
Well, look, I think it is encouraging to see a sign of a bottom. What we have heard is this has not necessarily been driven by mass buying, more short covering, right? And I think that we want to see the real buying, continue to see positive revisions in the earnings that come through. But overall, it is an encouraging sign. But I think it has been a lot of short covering after this big leg down.
All right, now let's talk about what you like here. Okay, so ServiceNow, you say meeting reinforcements, right to win in entrepreneur AI. You've got to buy on this stock. I'm in it. I've been getting hammered, but it's made a hell of a move. Yeah. I mean, you may not realize it, folks. This is a 24% move off the low. Obviously, a lot more to go, but you seem confident. You've got to buy on this.
Yeah, we were meeting in their office with their president this week, and I think one of the key themes that stood out to us on the positive side is they're actually seeing some of these model providers come to them to help accelerate and unlock these deals. If you think about ServiceNow, what do? They really sit between various different departments in an enterprise. So they have a ton of data that is very proprietary. It's hard to access. They understand the mundane processes of a workflow that has a human in the loop. Those aren't things that an AI can come in and automate. So they just launched this agentic worker offering that is going to be this consumption revenue stream that we think actually can help accelerate the business. So this is one of the beaten down names we're more constructive on.
By the way, speaking of the jobs report, jobs for software engineers through the roof. Like it goes 100% counter to the narrative. Let's talk about another name here, another beaten down name, and somewhat maybe more controversial now, Oracle, right? Because Oracle made all these big moves. It thrusted itself into the conversation. And for a split second, Larry Ellison was the richest man in the world, his lifelong goal, and it's gotten hammered, right? Yeah. But we could see the gaps up in the past where it gapped higher, and it's so crazy to think the street was this excited about something, and all of a sudden it's struggling down here.
Yeah, look, I think what's happened here is, and that peak was right after they announced this big OpenAI contract, right? So the market has sort of decided that maybe OpenAI is not the #1 winner, although they're doing quite well, $110 billion round that they just raised in terms of funding. But I think what you have with Oracle is they're raising a lot of money to fund Stargate and these large infrastructure builds. So you see some concerns in the debt market. They're issuing stock to do that. I think once you get past that, this is a big year of investing. that's really when you see the revenue and earnings take off. So I think if you have a 3-4 year time horizon, maybe even a little bit shorter, this is a great move. I think near term it could be a little range bound, but fundamentals are still intact.
I got to ask you about Mongo, because Mongo's a name that, again, it had all these gaps to the upside. 1, 2, 3 major gaps to the upside. All of a sudden it's killing it, and all of a sudden, and the numbers seem to be good to the layman. The earnings seem to be pretty good. Now, you do have a high risk. So you say it's a buy, but you do have to caveat that it's a high risk buy.
Yeah, I think that comes with the territory of any high growth name, right? Higher expectations. But I think this pullback is a great buying opportunity. As you said, the earnings were strong. If you look at their bookings, they grew almost 100% year over year. So we do think this business, some of the biggest AI companies in the world are actually using Mongo to power their agents and their in their offering. So we think there's a lot of upside ahead.
Let me squeeze one more in real quick, because another controversial name, and again, you've got to buy high risk for CoreWeave next fourth quarter. You say that delayed, it's sort of a ratification sort of required. So this is a name many people say that this I don't know, it's gotten a lot of bad rap on
a lot of controversy.
A lot of controversy. But obviously you see through this controversy. You acknowledge it by saying it's high risk, but you still think it's a buy.
Look, I think this is a very non-traditional business model. There's a lot of leverage, no question about it. But if you look at who their big customers are, Microsoft, Meta, OpenAI, some of the most successful companies in terms of generating cash, raising cash. This is another one where you kind of have to see through some near-term capital raising, et cetera, before you get that earnings power. But ultimately, they're powering some of the largest AI clusters out there in the world. We do think this is going to be a multi-trillion-dollar market with lower margins, but it's still it could be a profitable business over time.
I can tell you right now, I've always said you're one of the best on the street. You're right about this stuff. 6 months, a year from now, you're going to be very heroic, very heroic. I'm glad you came on to talk to us about it.
Appreciate it, Charles.
Thanks.